Hello, Assalamu alaikum students. This is your teacher Azka, and today this video is all about that how many ways there are that we can do our evaluation for A levels business in your 20-mark question and in your for your 12-mark question, and even this is for AS levels also, like for 12-mark question. So we basically whenever we try to evaluate our answer in each paragraph, so most of the students, they get confused, and they don't know that how to do evaluation, what type of topic we should pick, and what type of points we should write. So I am going to share with you certain points for evaluation. It might be 9 or 10 points, I guess, so maybe 8 to 10. And you just need to revise, you just need to memorize all these points, and you don't need to confuse whenever you will be going to evaluate your answer. So you just need to follow all these points, and you will be get through with like through your evaluation. Okay, so as you can see that in my first example, that how many ways there are for evaluation. So first thing is the comparative evaluation. So as you can see in the notebook, so comparative evaluation means we know that there are always two types of options, and we have to select one at the end of your paragraph, in your conclusion paragraph. But yes, evaluation is important. You have to do the evaluation in each paragraph after analysis. So but yes, whenever you have to make conclusion and you have to make a choice, so you can do this comparative evaluation. So as you can see that we have a scenario that a company is deciding between adopting a cost leadership strategy or a differentiation strategy. So as you can see that I evaluated these two. So in question we always be discussing the two things, or you can say the two strategies at the time, or maybe more than this. So we can do the comparative evaluation. It means that we can compare both strategies, we can compare its pros and cons. So as you can see that in cost leadership, what I have written, that adopting a cost leadership strategy could allow the company to compete on price, attracting the cost conscious consumers. However, it may lead to thinner profit margins and require significant investment in cost reduction measures. So this is about the cost leadership. I have discussed its pros and cons also, and with that I compared the other strategy, which is um, the differentiation. So for the differentiation, on the other hand, a differentiation strategy could enable the company to command premium prices by offering unique products. This approach might increase brand loyalty but could also involve higher cost in reach and development. So this is a one way to do the evaluation. We can compare your both strategy and both options, whatever the question, whatever the examiner would ask to compare. Okay. So after that, we can also we can also analyze the cost and benefits of two things. For example, if you have this scenario, as you can see, that a company is considering investing in new technology. So how we can do its evaluation? So now this is very easy. So we can compare the the relevant strategy. We can compare its cost and its benefits. And these information which you can see in on screen, the initial cost of the new technology is 500,000. So this type of information you will be getting in your case study. So we know that in evaluation, your application is a must. You have to apply your whole question throughout, whether you are doing analysis or evaluation. So in evaluation, we also need to write all the information which is written in the case study. So we can compare the cost and benefits of the specific strategy of investing in the new technology. So as you can see that we can talk about its cost, and if you see that it is like giving us the additional training cost, training expenses, which is $50,000. Because we know that whenever we are going to invest in new technology, so it's always difficult for us to train our employees, and we have to hire maybe a trainer, and we have to bear expenses also. So we can say that we can compare its cost and its benefit. So as you can see that its benefit is that if the technology is there, so it could improve the production efficiency by 20%. So this 20% will also you just need to extract from the case study. So because this is journal examples, that's why I've written this written here like these all these numbers are imaginary. It is estimated, or you can say um, this is imaginary numbers, leading to annual savings of $200,000. Okay, so just remember one thing: I am not writing the level 3, level 1, level 2, level 3 evaluation. I am not giving you this lecture about how to do the evaluation. I am just giving you the topics, or you can say the points. On these basis, you can do your evaluation. So over 5 years, the total benefits would amount to 1,000 outweighing the cost. So here as you can see that in this example, I compare the cost and benefit with each other. Okay, so now let's see the other one. So in the other, you can also compare uh, the long-term benefits with the short-term impact. The long-term impact with the short-term impact of any strategy and for anything. So this is a scenario. As you can see that we are going to expand in a new market. So how can we evaluate it? We can compare its long-term impact with the short-term. So if we expand into a new market, so what would be its short-term impacts? We can talk about it. So in the short term, the expansion will incur significant marketing and distribution cost, potentially straining the cash flow. So if you have a very juicy case study with a lot of numbers related to the cash flow forecast, so you can use it. And in the long term, however, in the long term, the new market could offer substantial revenue growth and diversification of income streams, reducing overall business risks. So here as you can see that I compared its short-term impact with its long-term impact. So this is also a way of doing evaluation. Okay. And in the fourth one, the risk assessment. We can also assess the risk. So we have the scenario that launching a new product line. So what would be its evaluation? So risks are the primary risks include market acceptance, potential cannibalization of existing products, and supply chain disruptions. So this is a risk you can also get, or you can also extract these risks from the case study. That whenever you are going to launch a new product line, so there would also a risk that whether your market would accept this or not. Or maybe we can say that the competition from your rivals are also a kind of risk, and maybe from the supply chain disruptions. So we can basically compare the risk and rewards. So rewards include capturing a new customer segment, increased market share, and potential for high profit margins. So this is the reward if we launch a new product line in the market. Okay, so in the number 5, the stakeholder analysis. We can also do the evaluation that how our stakeholder would react if we will be implementing something, some strategy in the business. So stakeholder analysis. So we have the first scenario, which is a merger. So in merger, we have the evaluation that if the merger would happen, whether this is horizontal or the vertical merger, so how what we will be doing, how the stakeholder will be reacting. So we can talk about the different stakeholders, whether these are the employees, customers, or the shareholders. So employees might face uncertainty and potential layoffs, impacting morale and productivity. And if we talk about the shareholders, so shareholders could benefit from increased market share and potential cost synergies leading to a high dividends. And if we talk about the customer, so customer might experience improved product offerings, but could also face higher prices due to reduced competition. So as you can see that a merger will be affecting our stakeholders differently in the positive and in the negative way also. So this is how we can do evaluation on the basis of stakeholder reactions. Okay. So now let's see the sixth one, which is scenario analysis. It means that we have to see the scenario. Scenario means that we have to see the factors, whether this is external or internal. So this is a scenario that different economic conditions. It means that we can see and we should see different economic factors. So how can we evaluate it? Economic boom. So in an economic boom, consumer spending is high, likely boosting sales and profitability. So if you know that you will be finding different economic, maybe in some case study you will see that there will be different economic information you will see in the case study, and you can use it for your evaluation. And if this is maybe recession, if you see maybe in the case study if there's a recession is going on, so during a recession, reduced consumer spending could lead to lower sales, necessitating the cost cutting measures to maintain a profitability. So this is how you can do the evaluation on the basis of scenario analysis. Just give me one second. Okay, so I'll just come back. Okay, so in 7 points, if you see, there's a SWOT analysis. Okay, so in SWOT analysis, I know this is basically the approach of strategic analysis, but you can also do evaluation on the basis of SWOT analysis. Means that we can talk about the strength and the weaknesses and opportunities and threats of the business. Uh, this is a scenario that we are going to enter in an international market, so we can do the evaluation on these basis. We can see the strength. It means that whether this step is we can say that have potential to be successful or not. It depends upon our strong brand recognition, robust supply chain, limited international experience, and potential cultural barriers. And if you see the opportunities that whether this is entering this strategy was successful or not, it depends that do we have these opportunities, for example access to a larger market customer base and diversification, And if maybe we just want to know that maybe do we have a kind of threats or not. So if there is a political instability in the new market or currency fluctuation, this is also the thing which will be influencing us. So it means that we have to talk about those things which will be influencing our business strategy. Okay. So we have the pestle analysis. We can do the evaluation on these bases also. So for example, if there is a scenario and there is just like some regulatory changes. So how can we use the pestle analysis for its evaluation? So if the new trade regulations could increase the import cost, inflation rates might impact consumer purchasing power. This is the economic factor. Social factor, changing demographics could influence the product demand. It means that maybe there are more younger people, and maybe the younger audience would be your target audience. So if there are maybe some changes in maybe there are more younger people now in a certain country, so it means that it will be influencing your product demand. It will be boosting up. Technological advancement could provide opportunities for innovation, and stricter labor laws might increase the operational costs. So there would be different other legal things like it might be from your customers also. And we have to see some environmental factors that there may be some type of sustainability regulations could necessitate investment in eco-friendly practices. Okay, so now let's see the ninth point. We can do the evaluation on ethics. So the scenario is that we are going to use outsourcing production. So how can we evaluate? So there would be a lot of ethical issues. For example, outsourcing to countries with lower labor standards might reduce costs but raises ethical concerns about worker exploitation. And it also shaking your reputation that maintaining high ethical standards can enhance a company's reputation and foster customer loyalty. Because we know that if we are going to use outsource, we're going to outsource, so it means that it will be maybe shaking our reputation. Maybe the other company from where we are going to like have a service of producing something, our product. So maybe they are not so much ethical and they are not following the rules regulation and they are not sustainable, and they are not using the resources in a better way. So it means that it will be harming the reputation of our business. So if this is a scenario, so we can maybe evaluate it on different ethical issues. And we have to see the financial matrices and ratios. So this is useful whenever you are going to evaluate a new project or anything, any new strategy. So we can use different financial matrices, whatever the examiner would give you. Maybe they will be giving you ROI, payback period, or maybe they will be giving you to this ROI and payback period to calculate first, and after that you can use it like in paper 3. We know about it, so we can do this thing also. But yes, financial matrices is not only about the ratios. It could be also your income statements, your financial statements, your cash flow statements, and the other things, your break-even chart also. Okay, and we can also use a benchmarking. It means that we can compare our performance with our rivals. So this is a performance, like we are going to compare our performance. So we have to compare ourselves with the industry standard and with the competitors. As you can see that I've written here, the information. So again, I'm telling you this is the topics on the basis of you can do your evaluation. And also the feasibility study. This is also a way to do your evaluation. So it means that you have to see if you have maybe some data from the market research or maybe any financial projection. So you can use it for your evaluation. We can talk about if maybe something like, for example, if government um, did any kind of research, and if maybe the figure of of that from that market research would be helpful for you to make any decision, so you can use it. So this is about a feasibility study. if you have some information related to the research. And we can also do the evaluation on the basis of sensitivity analysis. Sensitivity analysis, it means that we have to see that whether if something is going to happen, if something like if you see that if maybe any strategy we are going to implement, so whether this will be impacting a raw material cost in a negative way or in a positive way. So we have to see this, because if the cost is increasing, so we know that our profitability would decrease. So we can do the evaluation on these bases also. And you can also just read the information from here. And also we can do the evaluation on historical analysis. It means that maybe if we have any information related to our history, it means that our past experiences, we can do the evaluation. So we can do the evaluation on the past performances, whether this is related to the monetary terms. So the company's previous expansions have resulted in average revenue growth of 12% annually, indicating successful strategy execution. And we can also see the trends if we have this in our case study. So, however, recent trends show a slowdown in growth of 8%, suggesting the need for reassessment of current strategies. And we can also talk about the other things, like for example, if maybe the information which you will see in the case study, if you think that this is not enough to make a decision, so you can talk about this again. For example, if the data is not sufficient for you to make any judgment, so you can talk about that maybe that thing would also important, but this is not discussed in the case. But if that thing will be maybe if maybe that thing or that information would have given in the case study, so you can make better decisions. So you can talk about the other information which you don't have in the case, but you do require to make any judgment. So these are some ways, like you can do evaluation on these things. You can use these things for evaluating your answer. Okay, so this is it. So we will be meeting in our next video, most probably for the AS levels accounting paper 1. So yeah, okay, goodbye.